Welcome to the final hour of Daybreak, and you're listening to me on, and this show is actually called Talk Compliance. This hour, in fact, is called Talk Compliance in courtesy of Tally Solutions. We're talking to CA Prateem Sengupta. He's the Associate Director and Direct Tax, and he is going to be here in our studios. In fact, he's here in our studios. He's going to be talking to us about tax, about compliance, and about everything that we want to know. Welcome to the show.
Thank you. Thank you for having me.
So this is the third or the fourth time I'm seeing you in our studios?
Third time. I think once I was just accompanying someone, and there's a second time I'm speaking. Yeah.
But it just feels that I've been speaking to you so often that I already had my questions in place. Ki aap aayenge and I'll start bombing you with the questions.
That sounds scary.
So that's Sharon, and she is, co-presenting with me on the show today. And we're going to be talking to you about staying compliant. Now, the first question that I have is, if I have an entity in free zones, does that mean corporate tax does not apply to me?
Okay. You started off with, I think, quite a difficult question. So, okay, I'll break this down into a few parts. So, a lot of people, when they set up entities in the free zone, at that point in time the government had indicated that certain taxes would be exempt for them. And when corporate tax came in a few years later, way corporate tax is set up across the world, you have within the law you give benefits to certain kinds of entities and you don't give. So it's a yes and no. Okay. Free zones do get a benefit from a 0% corporate tax, but it is highly conditional. There are a lot of conditions attached to it, and you need to see what kind of business you're conducting through the free zone. Like, it's not that if you have a restaurant, it will not be 0%.
Okay.
But if you have a manufacturing entity, it might be 0%, subject to doing a lot of things. There are lots of checks and balances, so you'll have to see. So it's a yes and a no.
But Prateem, at the start, did free zones had these listings? Because suddenly I see a lot of conditions being applied to free zones.
Yeah.
So were these conditions already in place, or did people know about these conditions, or were we just focusing on यहाँ पे तो tax भरना नहीं है?
Initially, people did not have an idea of the conditions to be met. It only came in, I think, once the corporate tax law was announced, and ever since day one, right, when the law was announced, at least the Federal Tax Authority or the Ministry of Finance has always indicated that this benefit that was earlier, people thought that it was unconditional, would be conditional and would be subject to a lot of like checks and balances that you have to meet, and it will not be available to everyone. It will only be available to certain kinds of entities. Yeah.
But how was it back in the days that people could get away with this, and now suddenly it's all being scrutinized? Were people aware of, the boundaries of the fenced areas and all the other terminologies that are being put out at us? Were people aware? Were businesses aware of it? I'm talking about normal businesses who didn't have that kind of a backing where, being business literate was concerned.
Yeah. So, if you ask me 8 years back, no. But ever since VAT came in 5 to 6 years back, these terms are known. So if you're a business, you're likely paying VAT. And VAT also has a different regimes for free zones. Corporate tax law has not, introduced any kind of new terms, but has made things, not as favorable as one would hope for if you have a free zone entity. So for 5 or 6 years, businesses are mostly aware what are free zone, what are fenced areas, what are not fenced areas, where you will get certain tax benefits, where you will not get certain tax benefit. But the only assumption was that when corporate tax law came in, everything would be exempt for free zone entities, regardless of whether you're in a fenced area, whether you're not in one, and regardless of what kind of business you're carrying out. So, but this, when the law came out, I think a lot of entities, I think their assumptions fell flat, and now not everyone will get this.
So we're talking about corporate tax, and when it came into effect a couple of years ago. So are there any clarity on what a qualifying income is and a non-qualifying income, and how does it work, and has there been any development recently on this front?
So when I said conditions, right? So a free zone will have to first see whether it's earning something called a qualifying income. Only a qualifying income would be subject to 0% corporate tax.
Okay.
If a free zone entity earns something called a non-qualifying income, right, that would be subject to the regular rate of 9%. So you have to see whether you're earning a qualifying income or not, and the Ministry of Finance has brought in stream of activities that would be considered as a qualifying activity giving rise to that kind of income. And it's from manufacturing to distribution to a lot of different activities, reinsurance services. So you have to see a list whether you fall under the list, but it's not an unlimited list. There are only 12 activities. It doesn't cover all.
But you're talking about rerouting your complete business functionalities, right? I mean, for somebody who's taken a license of a free zone, is taken with the perception that yes, मतलब मुझे कोई tax यहाँ पे नहीं भरना है. I'm off it. I can do whatever I want. I can do trade. And which most of them under their banners were doing a lot of things.
Yeah. So I think this is just, let's be honest, when corporate tax law was introduced, and the reason of introducing corporate tax law in this country was majorly to align UAE to global standards, right? And one thing that meant is not having preferential treatment to certain kinds of entities. And they had to do this because if you look at the world and how corporate tax law is set up here, UAE is not doing anything different. And they had to do that because of other external pressures, and they had to shift gears of sorts. Yeah.
And even talking about shifting gears, Sharon, I'll let you lead the next question, but quickly, let's slip into the break. And once we get back, we will be talking to our CA in our studio. And this is all courtesy of Tally Solutions. Thank you very much, our Tally partners, for always putting us on path where knowledge is concerned. You stick around to Talk 100.3.
Talk 100.3.
Welcome to Daybreak with me, Muriel Disa and Sharon. And today, talking to us, we have CA Prateem Sengupta, and he's talking to us about UAE Corporate Tax. Discussion is, going to be on a public consultation paper for free zones. What is this all about? We'll get chatty with him. He's also the Associate Director and Direct Tax at Anderson UAE.
Yes, so just like you mentioned, Muriel, can you tell us a little bit more about the consultation paper and how does it work, and are there any timelines with regards to it?
Sure. When I spoke about these qualifying activities in my last, answer, there were a lot of gray areas. So when they said that manufacturing, activity, they said distribution activity, but only one kind of distribution activity. So what happened was a lot of industries felt that, and leading from the previous question, felt that they were not getting covered by the, by this beneficial regime, so as to say, so as to speak. Now, what the government has done is they have brought in a consultation paper. It just means that whatever activities were listed, right, they have broadly, expanded on and, explained what kind of activities are covered. So if it's manufacturing, it's toll manufacturing or manufacturing for yourself. In terms of distribution, it could be distribution whether you distribute into the mainland or you distribute or you export it. So they have explained a lot of terms, and they've given some kind of a reasoning for some activities, and they've also asked the public to give their inputs. Are their activities getting covered? Do they want something more? So it's kind of like a dialogue with between the government and the general public and businesses, and what should be covered, what should not be covered, but with certain limitations. And this is open till around, I think, 2nd August.
Right.
So businesses have a chance to give their feedback to the government till 2nd August. I think it's a wonderful idea, very honestly, and whenever governments have such dialogues with the public, it results in a better law.
Because they're still in the initial stages and they're streamlining everything, so it just makes sense to get that feedback from the public. But going back to qualifying income, is there a certain amount?
So in terms of earning the amount, there is no limitation earning a qualifying income, but a non-qualifying income, and I'm speaking very broadly here,
Right.
you cannot earn something which is tainted. I'm using the word tainted.
Right.
Beyond 5% of your total revenues or 5 million dirhams. So it'll affect large businesses. Say if you're doing some qualifying distribution activities, right, and your revenues are 100 million, your revenues from tainted activities cannot exceed 5 million. If it exceeds, then you'll not get the benefit for any of your income.
Right. So when you are on your path of, educating so many of these business owners, right, Prateem? Now talk to me about what are the common concerns that they come up with, especially from the free zones. I'm sure they'd have a different set of requirements, a different set of understanding. Have they aligned themselves with the understanding of the corporate law, or are there any grey areas that you see?
No, there's still a lot of grey areas, and especially I think UAE is majorly a distribution kind of an economy where people are mostly doing trade, and for traders there's still a lot of gray area. Actually, the majority of the consultation paper, the key aspects were related to trading, where they're trying to cover a lot of scenarios for traders, where initially they had only covered one kind of scenario. So they brought in some other kinds of scenarios, but all the scenarios are still not covered, and that's for different businesses. Even after the consultation paper, even for entity like manufacturing entities, there are certain gray areas. I think right now people are just trying to just understand what the impact is. Majorly it's for businesses first to accept the fact that they may not be under a 0% tax regime, some of them, because some activities are completely a no go. Like some things you cannot do.
For example?
For example, like a lot of multinationals have entities here where they have the brand located in the free zone. Like say, for an example, I'm not,
Say like Talk is located in...
free zone.
Like,
I'm
a distributor for goods and I'm located in the free zone.
Yeah. So, okay. So you're distributor of goods and you're located in a free zone. Say you're just selling the goods to the mainland, right? That may be covered. But if you have a brand like Talk, right, and you're allowing someone else to use the brand, that's a tainted activity. Now, if you earn a lot of income from that tainted activity, you will not get free zone benefits. So a lot of businesses in UAE had their IP, you call this intellectual property. So
like you sublease it and then you
license it.
You license it.
Yeah, you license it. But that's a tainted activity. That's a big hit. Then even property. Now, if you're a free zone entity and you have a mainland property, or even if you have a residential property in a free zone, you cannot, that's a tainted income. So property again, so property has also been given a very limited benefit. Only free zone located property which is commercial in nature, like you're leasing it out for to businesses, those are the only income that is qualifying. All kinds of property income is tainted. So that's a big hit.
We've been talking about distribution activities and if they are covered or not. But have there been any recent developments on this front?
There have been, like I mentioned in the consultation document, they try to cover more scenarios. So usually how does distribution work? So someone can buy goods, how does UAE distribution work? Mostly companies buy goods from outside UAE and sell it into the mainland, or sell it to another distributor, say a supermarket.
Right.
Into the mainland, right? And they sell it to the ultimate customers. That scenario is covered. Okay. But, what about when you get, buy goods from UAE into UAE, but then you send it out of UAE again? You're not selling it to a retailer within UAE. You're selling it to a retailer, say, in Oman. Right. Or in Saudi Arabia. That scenario, when you're getting the goods into UAE and sending it back out, that doesn't seem to be covered, and that a lot of traders are doing right now. So there are different scenarios, like what at least I have mapped out. There's 6 different kinds of scenarios a trader can have.
Okay.
While the law and the consultation paper only covers 2 to 3.
Okay, so could you take us through what are your understandings and the scenarios that you have mapped?
Yeah, I have already told you about into UAE and then into mainland.
Okay.
Now there's one scenario where distributor buys the goods from, say, country A, right? It's a foreign country, and sells it to country B. It's a foreign country again, but the goods never enter UAE. Okay, it's shipped directly from country A to country B, while the UAE entity just purchases it through an invoice and sells it through an invoice. This is called a high sea sales, where the goods never enter your country, but it's direct shipping. That also seems to be covered. But the third scenario, like I said, same scenario, slightly altered. Here the goods actually enter your country from A to UAE and then UAE to B. That scenario, which is slightly modified, is not covered.
That I understand, because you're entering the country, you're using the port of entry of the country, and maybe that is why the government is asking you to pay whatever the taxes that you have to, right?
I think no, but if I look at it, if the government is allowing you to get in the goods into, say, UAE and then supply it to the mainland, if they are exempting that, they should exempt also re-export. Right.
But then the economy is within the country, right? I mean, your expenditures within the country. I think that's an angle if the government would be analyzing.
Maybe. And then there are other scenarios also where, where again, country A, you're selling directly to a mainland entity. Okay, here the goods don't come to you, but A supplies it directly to a mainland entity. So there are different variations of each model. Right now there are only 2 models that are covered, and traders and distributors are mainly looking and will use this consultation document as a platform to tell them that we do business in other ways as well. Let's see whether those get covered as.
And well, we are talking about manufacturing entities, and I think we can kind of get a little bit deeper into this topic straight after these.
Talk 100.3.
Welcome back to Daybreak with me, Muriel Disa and Sharon. And joining us today, we have CA Prateem Sengupta. He's talking to us about staying compliant, especially where the free zones are concerned.
Prateem, we were talking just before we took a break, we were talking about the additional scenarios when it comes to distribution paper and distribution entities, and then we did touch on manufacturing entities as well. Yeah. So would there be an entire income? Will their entire income be taxed at 0%?
Yeah, so, while initially they had said manufacturing activity would be subject to 0%, but the consultation paper has broken this down. So let's take an example. Okay, pen is in front of me. Right. Say I'm a manufacturer of pen, right? And say BIC, right? Everyone's heard of.
Right.
And so there are 2 kinds of manufacturing. I can subcontract this manufacturing. I can give it to someone else to manufacture. So say I'm a subcontractor. I don't have my own brand or anything. I just manufacture for another pen maker, but I'm located in the free zone, and the manufacturing plant is in free zone. And I manufacture, give it to them, and I earn the income. That is 0%. That's okay, as long as your plant is in a free zone and you're carrying out the activities in a free zone. Now, say you're the person who owns everything, brand, everything, and you're yourself, you're not subcontracted. You yourself are carrying out this manufacturing activity. Now, for the manufacturing income, so this gets a bit complex. So whenever so for the manufacturing income, it's 0%. But once the goods is manufactured, right, I have to sell it, I have to distribute it out. So it'll be branded, there'll be a brand on the pen, and I distribute it to some retailers, and then the retailers will sell it onwards, right? That distribution activity, right? So that will only be 0% if you meet those distribution activity conditions. So you'll have to be located in a fenced area, a designated zone, and only then will it be 0%. But if you're in any other kind of free zone, if you're doing manufacturing plus distribution, your manufacturing income will be 0% while your distribution might be 9%. So they have made this a bit complex.
And how is this working in favors for the manufacturers? Because now this is an added burden on them, right?
Yeah. See, from a financial reporting perspective, manufacturing entities who carry out both kind of activities, their financial statements are the profit and loss account is usually broken down. You can figure out what is your manufacturing profit, you can figure out what is your distribution profit, but it's just big compliance burden, splitting the profits, and then gives rise to certain kinds of gray areas. You will have common costs, right? Like employees will be, some management folks will be giving time to manufacturing also, will be giving time to distribution also. How do you split their expense and costs? So there's a lot of subjectivity involved, and whenever things like this come into a law, it gives rise to complexities. But though exempt or making manufacturing income 0% is a very good thing. Most countries around the world do and try promote manufacturing, and UAE has recently tried to push this. They've tried to increase manufacturing within the country, because till now this economy has heavily relied on imports and goods coming in through trade. They now want to push, companies setting up their plants here and creating manufacturing here itself. So it might cause a boon or a boost to the economy in the near future.
What about restaurants and hotels and hospitality sector? How do you see this falling into this picture?
Yeah, I think they're in a bit of a pickle.
They are, right?
Yeah,
Because
they
you're seeing residential one side and then you're seeing commercial activity one
Yeah.
side. Because I understand properties that are brought for, say, for commercial aspects
Yeah.
will not be levied the
Yeah.
the relief, right? I
Yeah.
mean the zero, they fall under the 0%
Yeah.
ambit. But now for a residential property, I'm not talking about a hotel. I'm talking about, what if I'm an Airbnb property and I want to sell it out as a commercial aspect or as a as an avenue to make money.
Yeah.
Will I be taxed?
Yes. So when
You could have said no. I was just hoping you'd say no.
so when you are, the way they've defined residential, they've also included hotels. So hotels have been specifically included. So any kind of hotels that is giving out rooms for rent in a free zone, and income from that would likely be taxed at 9%. They have not got the exemption. So while one could argue that what they're carrying out is a commercial activity, but they're treating that as a residential kind of an activity. So Airbnb would be another morphed version of a residential unit itself, and would fall into that bracket. So it is quite, so that's what the exemptions, or the 0%, right, benefits are very, very selective, and they've excluded, and especially for property, they've excluded a lot of items. Yeah.
So we're talking about service entities, restaurants, hotels, hospitals, and so on. And you did mention that some of these excluded activities, and what some of the key ones are, and what are some of the impacts of these?
Yeah, so I've already spoken about, the key ones. I think the brand, which I've said that a lot of multinationals, when they set up shop, or when they were looking at UAE, they were looking at placing the brand in UAE, because UAE did not have a corporate tax regime. So any kind of license fee that they earned, from UAE, or licensing the brand, it would have gone at a 0% corporate tax. And very honestly, a lot of companies thought that, when corporate tax also came in, holding a brand or holding an intellectual property within a free zone would be subject to 0%. So this has come like a bit of a shocker, exempted. It's going to be subject to tax. And number two, property. So any free zone, you have free zone entities not only owning properties in free zones, right? They own properties in mainland.
Yeah.
Any kind of income from a mainland property, it doesn't matter commercial or residential. That bifurcation is not there for mainland property.
So if you have a sister concerned property in the mainland, you're taxed.
You're taxed on that income, 9%.
Well, absolutely. We won't tax you right now. We will just lead you to the news and the sports that are lined up. And we will continue our conversation with CA Prateem Sengupta, talking to us more about staying compliant. You stick around to Talk 100.3.
Talk 100.3.
Absolutely. Talk Compliance in association with Tally Solutions is the hour that is currently ongoing, and we are in conversation with CA Prateem Sengupta. Now, he's talking to us about staying compliant. Before we could go on this break, Prateem, you were talking to us about the different services, the different industries, and you said how restaurants and anything residential don't really earn any benefit out of this. They have to pay. They do fall under the 9% tax.
Yeah. So I covered hotels and Airbnb situations, right? But restaurants also, if we look at what is like a non-qualifying activity, or how they're terming it as excluded activities as well, something which is tainted. So if you're dealing with natural people, right, like you and me, if you're selling a service or selling a good, that is also a tainted activity. So if you're a restaurant, your customers are individuals, right? A company is not coming into your restaurant and eating, right?
Yeah.
So there it would be considered to be a tainted activity and not allowed.
Why?
It's because they want.
So if I'm a consumer, if I'm a restaurant, it's a service, right? How? I still don't understand the logic of
So it is basically okay. It's to do with more macroeconomic issues,
right?
Where mostly countries when they're giving out benefits to in corporate tax, they look at certain sectors, and they while UAE is trying to push some distribution and some manufacturing entities, but a restaurant, think about a person who has a restaurant in the mainland. They have to pay corporate tax, while a restaurant in a free zone doesn't have to pay. It seems a bit of a bummer, right? For the mainland restaurant. So somewhere they have to keep the law equal for everyone while giving benefits to certain activities, certain economic activities, restaurant and certain services like hospital also. The hospital, if it's in mainland, will have to pay tax. Just because you're in a free zone, you don't have to pay tax. There's no logic to that. So a lot of countries don't give benefits to hospitals or to restaurants, and that's consistent with what is followed in the global standards as well. And private hospital, so if you're a government hospital, if you're owned by government, you might be exempted, but if you're a private hospital, you're likely going to pay tax.
Now I'm talking about different free zones. So do all the free zones follow the same guidelines, or is it different for different free zones? Because I do understand that there are umpteen number of free zones and they're all governed by different bodies. So talk to me a little bit about that.
Yeah, so this is a $1 million question because free zones are defined in the law, but they have basically mentioned that they'll come out with a list of free zones that would be considered to be free zones for corporate tax perspective. We don't think that there'll be too many ones excluded, or if any that would be excluded. The one to watch out for are what are considered to be designated zones, because these are those fenced areas like a Javza or a Davza. These are designated zones, and where we spoke about distribution activity, right? Those are only subject to 0%. You only get a benefit if you're in a designated zone. If you're a distribution entity outside a designated zone, you're likely not to get the benefit. So that's a big hit. So there are lots of distribution companies, say in DMCC, and lots of gold and diamond traders there, or textile traders in Dubai textile world, right? Those are not right now those are not designated zones. So what about them? Even when they carry out a distribution activity, it seems likely that they will not get the benefit. That is why the consultation paper is very important. And I think the government is doing a very good thing where these entities or these trading activities, these traders can reach out to the government and mention that, we are also doing such businesses, and, try and cover us. And then the ball falls onto the government's court.
We're talking about free zones, and if a free zone entity does not abide by these conditions, like what you've mentioned, what are the repercussions?
They are quite big, very honestly. So what they will do is they'll take away your ability to get this 0%, not only for those tainted activities, but for your entire income. And they'll take this ability away for 5 years.
So that's a long time.
Yeah, so for your current year and 4 future years. So that's a very, very long time. So businesses, and this is just activity. There are other conditions attached as well, which we can speak about later. But if you don't abide by any of those conditions, 5 years is the hit. So that's a long time. That's a long.
Absolutely. We're getting questions that are just coming in, but we'll have to get to answering all of that, CA Prateem, after the ad break. You stick around with us on Talk 100.3 because we are just talking about staying compliant, and this hour is called Talk Compliance in association with Tally Solutions.
Talk 100.3.
Welcome back to Daybreak with me, Murul Nisa and Sharon. And gracing our studios today, we have CA Prateem Sengupta. This hour is known as Talk Compliance in association with Tally Solutions.
And we were talking just before we took a break about the free zone entities and the repercussions if they don't follow all these conditions. Let's just get into, and you did actually mention about all these benefits, and it's not really available for all these free zone entities. So is this something to be expected, and is this consistent with the rest of the world, also considering UAE and the taxway still not at par, or even if you say as bad as it is in the rest of the world.
Yeah. So I think when I look at it overall from a corporate tax law, I think the law is very progressive. I feel when I compare it with other countries, because even if I just look at the tax rate, it's just 9%. All other countries, even if I look at other GCC countries, they're higher than UAE.
Right.
And they've tried to keep the reporting quite simple, and they've tried their best. The difficulty comes in is that UAE is not used to taxes at all, and something like a corporate tax. And corporate tax, the basis of it is your financial statements. And a lot of companies, I think, will now start, and small businesses would now have to start gearing up, in order to make a good financial statement and report properly. So that is the basis. I think that is the biggest hurdle that is facing most businesses is, preparing a financial statement and getting it audited if you require it to get audited, because that forms a backbone of your corporate tax law.
Right. We've also got a message that has just come in. It says from Pankaj, and he says, what if a free zone restaurant supplies to another free zone corporate customer?
That is a very interesting question, actually. What I did not specify earlier was this qualifying activity or the incomes that get benefit of 0%. If the income is derived, say a free zone entity is selling to another free zone entity, that is also 0%. You don't have to look at the activities there. It is 0% as long as the other free zone entity is a beneficial recipient. By beneficial recipient, you mean it is the ultimate consumer of the goods or the services. They're not passing it on to someone else. Here the tricky part comes in. If you're a restaurant and is selling it to a corporate customer, there is a gray area where one can say that the company is the ultimate customer because they are taking care of the employees. After that, you don't have to see further than that. There is another view which you can say that the ultimate consumer is still a person like you and me. It's a natural person. So will that get tainted or not get tainted? But even if it's 0%, say the restaurant is supplying to a corporate customer in free zone, even if that's 0%, but a restaurant does not usually only have one customer, right? They will have other customers as well. Then you need to see how much income you're deriving from the other tainted activities, whether it's exceeding 5% of your total revenues or not, or whether it's exceeding 5 million. Because restaurant will be serving natural persons as well, like you and me, would be serving other customers in mainland.
Correct.
Yeah, so then you'll have to see how much is a qualifying income and how much is a non-qualifying income. So it's a lot. It's quite complex.
So for a family-run restaurant, for a family-run business, this is a complete hassle, you're saying, in terms of understanding the nitty-gritties of it?
Yeah, it's a hassle, and it can get complex, like in this situation where they're supplying to a free zone entity. But ultimately, majority of restaurants serve people, individuals, or mainland customers or anything like that. So usually they have to pay 9%, other than this situation. So we have to see situation by situation. Yes, it can get complex. Usually a lot of businesses now have to reach out to a professional to understand what the impact will be and how to go about it. Because suddenly when you have income which is exempt or subject to 0% and you have tainted income, you have to know how much it is. Then you have to bifurcate costs and allocate costs accordingly. It's not an easy job.
Absolutely.
Yeah.
But now also, Prateem, if you can talk to me a little bit about, you just said free zones, correct?
Yeah.
You were talking about different free zones.
Yeah.
Now, for instance, if I am in free zone A and I know free zone D eventually is going to benefit from 0% tax,
Yeah.
you will see that influx of people, of businesses registering in that free zone?
Yeah, you will. And this is where I think, some of the other conditions that are attached to this benefit is having adequate substance in your free zone business. By adequate substance, they mean having enough people, having enough assets, and having enough expenditure. What does this mean in practical terms? Say you're a distribution entity, right? And assuming you have 5 million dirhams of revenues from that activity, but only 2 individuals are sitting there. The rest of the employees are all in the mainland. In such a scenario, you may not get the benefit because the substance of the business, the actual activity, is being carried out in mainland and not in free zone. So going forward, even in that scenario, when you set up some new company in free zone D, you need to employ enough people. You need to have a big enough office space. You need to have enough expenditure there, showing that you're carrying out a genuine business. It is not purely just to get a tax benefit. If it is just to get a pure tax benefit, then they may deny you the benefit. So it has to be a genuine business with genuine commercial activity, and that's when you'll get the benefit.
Yeah, because like you mentioned, Muriel, if you were to change like a free zone like that, and you would definitely see an influx of these companies registering, so it's going to have to be streamlined.
Yes, exactly. And you need to, as a government, also ensure that people are not taking undue advantage of the law, right, and benefits. So usually it's okay to give these benefits as long as people are genuinely carrying out activities there and having enough substance there. So that is one thing that businesses need to look out for. You have a business, you keep in free zone A, most of the people, you just open up a company in free zone D. No people, nothing, just start booking your revenues from there. That will not work. That will not work. You'll actually have to shift properly, and it have a reasons also, commercial reason, and just doing this purely from a tax, getting a tax advantage might be, most likely you'll not get the benefits.
Right. But Prateem, now talk to me about why is there so much of uncertainty where the free zones are concerned, and why have we not bifurcated the free zones already? What, according to you, could be the underlying cause?
I think there's still dialogues going on between free zones and the government, very honestly, and I think a lot of free zones, because they want to remain attractive to foreign investors or businesses, and had given out statements that there would be certain benefits available. Suddenly those benefits don't seem to be available. So I think there's still dialogue happening between the government and free zones. We have to wait and watch. I know it's a bit delayed. The law is still is already effective, right? There's not much time left, but I think there are still dialogues going on, and it'll be for the better, because once you have such dialogues, and like consultation paper, right? When you have things like this, eventually then it leads to certainty, even if it's a bit delayed. It's better to have those dialogues than not have them at all and keep things open-ended.
So what would you say are those critical aspects that a free zone entity should keep in mind if they're to avail these free zone benefits?
So I've already covered substance, right? And earning or qualifying income. Another critical aspect is, preparing your financial statements, getting them audited. So if you cross a certain threshold, or you're actually in free zone, you don't need to. If you qualify for these benefits, you have to get your financial statements audited. This is a big challenge, because a lot of entities in the free zones may have never gone through an audit. Right. Now, suddenly going through an audit means you have to have your systems in place, your processes in place, your reporting in place. That takes time. It's easy to say these catchwords and things like that, but it takes time. It's a lot of effort. And the fourth being transfer pricing. I'm sure this is a topic that has been covered, but if you're a free zone entity and you're dealing with your related parties or your sister concerns, those dealings have to be done at a market value. You have to report them, and it has to be done at a market value. If you now don't comply with that itself, the benefits will be taken away.
Yeah, I remember, we spoke at length where transfer pricing is concerned, and I understand that this can also be a grave concern for a lot of entities, because, suddenly you had... if obviously a husband and wife were part of the firm, someone is taking 20,000, the other person is taking 30,000, and my salary with zero qualification is somehow 25 to 30,000 on paper, and I'm obviously expecting my bank account is showing something else.
Exactly.
So I don't have anybody working. So again, all those expenses will now be taken into account.
Yes, you will have to now justify those. And if you have zero experience and you're pulling in a salary of 30,000, questions will be asked, because...
Then we need to go and learn from them how.
Yeah, I think questions will be asked. What they're trying to do is because corporate tax is ultimately a tax on your net profits. It's not on your revenues. And if you're paying salary to an individual or to someone who's employed, that would go on to reduce your income, right? Your profits, because it would be a deduction from your revenues. So what they're trying to do is trying to curb the amount of expenditure you can claim or not claim excessive
so
amounts.
that you don't pay that extra amount, right?
Exactly. So once you pay tax on the profits and you declare the remaining amount as dividend to your owners, it's okay. That's not taxable at all. But what the government wants is to at least pay 9% on the profits, and profits which are not reduced artificially. So that is what they're trying to curb.
Right. We're talking about staying in line with the other countries of the world, and especially where their requirements and their economies. How do you see this changing the dynamics of the game, where UAE industries, employment, economy, how do you see all of this panning through?
Actually, I see it in a positive way. A lot of people, are afraid that this may detract investors, but actually it'll do the opposite long term, because multinationals or corporates outside UAE love something called certainty. Okay, now whenever there are investors with big money, or big companies, say an Amazon or anyone, like big multinationals, what they like is a country to have proper reporting standards, like reporting standard in terms of preparing financial statements, getting them audited, so that when they are investing, they have certainty that how would it be treated ultimately, and it creates transparency in the economy. Up till now, if you had a company, it may not have had a proper financial statements. You never knew the genuine income or the losses of that business, right? Now with corporate tax coming in, you would actually kind of know. You would know, because there's proper checks and balances in place. So now if you're thinking from a foreign investor's point of view, you have more certainty, you have more transparency and knowledge about what you're investing into, and that will eventually drive the economy and jobs. And also, one critical activity that is covered within the qualifying activity is something called a holding company.
What's a holding company?
A holding company is any company that just is sitting in UAE in a free zone and holds the shares of other entities, and it acts like a holding. So it has subsidiaries all over within UAE or across the world, and any income that it earns, say a dividend or any kind of other passive income it earns through holding those shares, it will be 0%. So they're basically telling a lot of multinational companies or groups that set up your holding company in this region or in Asia, in UAE. Set it up and you'll get benefits here.
And I think that's why you're seeing a lot of headquarters being moved to the UAE
Exactly.
suddenly, right? I mean,
Exactly.
recently I can't recollect which brand, but I see something from Amsterdam moved recently to the UAE.
A lot of
A lot
companies.
of them are moving to the UAE. What are the benefits the headquarters would get if they move to the UAE?
Again, so holding company and something called a headquarter services also being covered. So that means they can create a company. That company can have subsidiaries all across the world. There can be senior management of that company sitting in this company in UAE in a free zone, taking senior level decisions, not operational level decisions, but overall a group level decision. What should the group do? Any kind of are the investments panning out or not panning out? Should we close the investment in that country? All those very very big level or high level decisions, they could place them here, and any income that they earn from these investments would be subject to 0% tax.
Now, Prateem, just before we let you go, we do know that the corporate tax here in the UAE compared to the rest of the world is still quite low.
Yeah.
Now, with this number, do you see an increase in the near future?
For certain kinds of companies, yes. For big companies, which are multinationals that have revenues of above 3.15 billion dirhams globally.
Okay.
That's a global revenue threshold. There it is likely that they will be taxed at 15%. And that is not because UAE, it's
That's
not
a
only
slab.
no, it's not only from a UAE perspective, it is globally countries are moving to that. It's called a global minimum tax. So a lot of countries, wherever say you have tax havens like BVI, right, where it's 0%, or Bahamas or something like that. Right now, so even BVI, British Virgin Islands, are moving towards a slab of 15% to large corporates.
Oh, okay.
So across the world, now you'll have a single tax rate of 15% for certain large enterprises.
Oh, interesting.
Well, this conversation can go on for
Yeah.
another hour. But thank you very much, Prateem Sengupta. He is the Associate Director, Direct Tax at Anderson in United Arab Emirates. Thank you for taking time out and coming to our studios.
Welcome, and thank you for having me.
Well, thank you so very much. Tally Solutions every hour Monday and Friday 9 to 10 is when we have Talk Compliance. And did you know that Tally Prime has also released a 3.0? This is available. It's something that you really have to get onto their website and take a read at. It is called tallysolutions.com. And on this note, it is the Daybreak team saying
Goodbye. We'll catch you again tomorrow bright and early.
absolutely. It is ciao for now. I'll see you soon.